Hello, this is Victor Santana with Stock Hunter's weekly video for July 5th. How's everybody doing? Hope everything's going fine. Let's go ahead and take a look at what's been going on in the market and go from there. And here we are looking at the U.S. total markets, PMW. And as you can see, we've been going down all last week. Down. We are below this zero line, which is good, where we normally like to pick up stocks here. This is the daily chart going back 3 months. The red line being the 200-day moving average, the purplish blue line 100, the black line being the 50-day, and the green line is the 18-day moving average here. As you can see here, everything's starting to diverge over here into this area, and so it's getting very tricky. We may be getting a bounce coming up soon, possibly because of the indicator here getting ready to cross over, the stochastics, and our histogram bars are getting smaller and smaller, meaning that the momentum of the downside is lessening now. If we do get a bounce, we do expect it maybe around up to this area here before maybe the next leg down here. So there's too much resistance up in this area. We're just going to have to play it by ear here. So this is the total U.S. market. Now let's go ahead and break this down into individual indices. Here we're looking at the Dow daily. Pretty much the same story. We've pretty much slid on all the way down here. The stochastics, as you can see here, is below the zero mark, and they're getting ready to cross. It seems like it's going to be a little while. The histogram bars are becoming smaller. So again, the downside momentum is becoming less and less now here. If we do get a bounce, we could expect something around all the way up to 101 area, or at the most 103 before considering going down. If you could notice, we are making lower lows here, so that is not a good sign here, and the trend is still downward. Let's look at the S&P 500. Same story here. We've just been sliding on down here. The stochastics indicators here are now way below under the zero. The histograms bars are decreasing in size here, so we may be experiencing a small bounce somewhere around in this area, again up to maybe the green line here, 108.30, max here 111 here. So we may be going up in this area here soon. As far as the downside, there could be more downside, but the overall market's still down. Let's go ahead and look at the NASDAQ. NASDAQ had a pretty big tumble going down here. The stochastics have not crossed. They are still headed downward. The histogram bars here are getting less, meaning the momentum of the downside is lessening here. We may consider a bounce here, possibly up to 45.26 here. And NASDAQ has broken below the 200-day line here. Moving average the third time, which is just a quick in and out here. And then another one here, but this time it broke down and we're still down here, which is not a very good sign. Now let's look at the Russell's 2000 small caps here, the riskier stocks. And here you can see we've been going down, and the signal line here has not crossed over, while the histogram bars are becoming less here. So we may again get a bounce maybe around into this area here. Pattern still pretty much looks like of the NASDAQ. Broke the 200, snapped back up, broke it again, snapped back up, and this time it broke it, and we're still under it here. Long-term trend, we're still looking downward here. Now let's look at it, the global stocks real quick. And as you can see, the global stocks is been leading the downside here. We are starting to get a crossover here on the stochastic, which is a good sign, and the histogram bars are becoming less here. So we may again get a bounce maybe around into this area here. The histogram bars are becoming less and less here, almost virtually zero. We may get a bounce. If we do, we could possibly see up to 53 in this area. Notice that we are still having lower lows on here, and the trend is still downwards, right over here, downtrend. So we don't expect this market to recover as of yet. Now, what I'm going to do real quick here, I'm going to be putting in some inverse signals here. DOG, which is the inverse ETF for the Dow 30. So when the Dow goes down, this will go up. So might as well consider getting into these. Okay, looking down here, first thing you notice, we've been going up here. Momentum has been building up pretty good, with the histograms now slowing down on this area here. So at this point, we would wait until we can get a cross downward before considering to get in. But as you can see, it has broken above this high and this high, and is up at this area. So we may get a pullback down to here with the red line, which is the 200-day moving average. So let's consider putting some investments in here. This is a one time, so as the market goes up, or actually goes down 1%, this will go up 1%, 1-to-1 ratio. Okay, and let's look at the NASDAQ. Pretty much the same story here. High here, a high here, 200-day coming down here, broke above it. Consider entering down in this area here. The stochastic has crossed over above, so we want to wait until we can get some negative bars, and then as it starts to turn green, we get in here for the next leg up. The Russell's 2000 inverse, the bear, RWM, pretty much the same story. The 200-day moving average broke above it, histograms above, so we want to wait and pick up any on the next pullback here. And the S&P 500, same story. Just pick some up right in this area. We may consider going all the way down here to 52.68, maybe in the next couple of weeks. If we do, that would be a fantastic time to buy. Put a tight stop. So we'll be keeping an eye on this week to week, and make some money on the downside here. So this is our opportunity to, instead of just sitting in cash, put some into play. I would put about no more than 0.25% of everything as far as on these trades here. So overall with all these. So for now, let's keep an eye on the markets, and we'll go from here. Till next time, keep your eyes on the market and be on the right side of the trend.